Good morning and welcome to Charting the Markets on Friday, the 20th of October, 2023. Now, risk-off sentiment is still very much dominating financial markets, and so is the US Fed. And yesterday evening, we had Jerome Powell speak, amongst lots of other Fed members, and basically he reiterated that inflation is still too high and needs to be brought down. And at the same time, he basically said that the high yields, and yesterday in the US, we saw, for example, the 10-year yield hit the 5% mark, a level not seen since 2007. That basically meant that a lot of the heavy lifting is now done by these higher rates, but still, his comments basically left the door open for a potential another rate hike to be seen in order to push inflation down. So even though his speech wasn't really that hawkish, the market interpreted it as such, and that led to further risk-off sentiment. Also, the tensions in the Middle East, as news came out yesterday that a US destroyer shot down one or several missiles which were fired out of Yemen onto Israel. So let's have a look at the FTSE 100 daily financial bet, and we can see here that we have declined by over 2.5% over the last 2 days, really, and are continuing to slide. And basically, we are now very close to the early August low and also the low seen back in late May, between 7,437 and 7,433. So that's the immediate downside targets. We're nearly there at the moment. But if that were to give way, and it does look quite likely, the next downside target is the late June low at 7,401. And then below that, we've got more significant support, because here we've got two different lows, the low going back to the beginning of September and the October low, which comes in between 7,384 and 69. So that support area may hold going forward today. And I wouldn't be surprised if towards the end of the day, we would get indices went short this week, basically buy back their shorts ahead of the weekend. Now, if next week we were to fall through this 7,369 early September low on a daily chart closing basis, then we're heading back down again towards this key support area going back to March of this year between 7,228 and 7,204. So right now, further downside looks to be likely with regards to the FTSE 100, and the story is quite similar in Germany. Here, what has happened is that last week we retested this key previous support area going back to July, which now, because of inverse polarity, has acted as a resistance area between 15,455 and 15,575 on this daily financial bed. But that then capped the upside and provoked a sell-off, as the rates higher for longer scenario is basically worrying investors, and as we see equity markets continue to slide. Now, with regards to the DAX 40, we're now trading at levels last seen, and the downside target there is 14,801, the late March low. And if that were to fail and not hold, we could then head all the way back down again to the banking crisis low we saw back in March of this year at 14,459. But basically, as long as we stay below this accelerated downtrend line, which today can be seen 15,140, the trend is your friend and is pointing down. And what I thought interesting for today is to look at the Russell 2000, the NASDAQ or the S&P, as we usually do, because here what's happened is that the Russell 2000, which is the great underperformer with regards to all the US equity indices, by dropping so far. Here what we're seeing is a retest of the major support area going back to December of last year. And this is basically made up of lows going back to between 1,700 and 1,619. And because this support area has been tested over several months since basically December of 2022, I wouldn't be surprised if today at least we were going to bounce off that area, simply because it's important support. But if 1,690 on a daily chart closing basis, then the odds are pretty high that we could actually retest the June and also September, October lows going back to 2022 between. There's a possible scenario going forward. And here again, provided we stay below the downtrend line we've had since the beginning of September, which currently can be seen around 17,600 and one. The US dollar is recovering and is not falling as much as other currency pairs are versus the US dollar, perhaps because some fatigue is creeping into the market as we basically trade sideways and have been doing so. This key support area going back to the early December and also January lows between 104.84 and 44, and that was where we basically bounced off from at the beginning of the month. To be seen here. If we were to manage to break above 106.39 and close above that level, let's look at the British pound against the US dollar. And what we're seeing here is the British pound continuing to slide back down towards its October low at 120.38, as UK retail sales fell quite sharply in September, 0.9%. And you can see here, yes, the volatility is decreasing. The candles are getting smaller, but we are approaching this key psychological 120 area. And perhaps we may find some support around that area next week. But the trend is your friend again, and this is still pointing down with regards to this currency pair. And if we look at Japan, earlier today we had inflation out in Japan, and it came in lower than expected at 3%, which is the lowest reading for a year now. And what we're seeing here is basically against the US dollar, the dollar-yen exchange rate approaching the psychological 150 yen mark. And above there, we also have the early October high at 150.16. Now, those highs completely come off this currency pair, and that is because investors are worried and traders are worried about the Bank of Japan intervening when that level gets hit, and therefore they're being very cautious, and not much volatility is happening around the current levels. But basically, from a technical perspective, provided we stay above this uptrend going back to July of this year at 149.40 or so, and also the last reaction low, that is to say a low below the previous candle, and the next candle's low made on Tuesday of this week at 148.85, the uptrend remains intact for this currency pair as well. And now I'd like to look at gold and silver prices, because they are kind of interesting, and gold has resumed its basically safe haven commodity status. As you can see here, the price of gold has risen very sharply from its early October lows so far by around nearly 9%, taking us back up again to the previous resistance areas seen between the June and the July highs, between $1,983 to $1,987 per troy ounce. And that resistance area, given the strength we're seeing at the moment with regards to gold buying going on here, is likely to give way. And if it does so, we could then head towards the psychological 2,000 mark. And also we have a previous high at $2,009 per troy ounce. So further upside looks to be in store as the tensions in the Middle East remain heightened, and as the markets are worried about the conflict dragging in other major players such as Iran and the United States, and thereby we could have a flare-up in the Middle East again. And that has led to the price of precious metals such as gold rallying very sharply, as I just said, over the last few weeks. And that trend is likely to continue unless short-term this 1,987 resistance area here were to hold today, in which case we could see a short-term consolidation, but not much more than that probably. And if you look at the silver price, the story is quite similar in that we've broken through our August to October downtrend line, which because of inverse polarity yesterday acted as a support line, as you can see here. And now we're heading up to the red line, the 200-day simple moving average at $23.33. That together with this week's high may act as short-term resistance, but if it were to be exceeded, we could then head up to the late September high at $23.56 and towards the September high here at the latest September high, $23.77. So these are the upside targets for silver. And as we can see on the silver chart on the daily financial bed, we also have here an accelerated uptrend line, which holds the silver price at the moment. And basically, provided we stay above Tuesday's low at $22.38, the current uptrend remains intact. And last but not least, I'd like to also mention the oil price, which is also heading higher because of potential supply worries to do with the Middle East and the situation there. And you can see here the price of oil has also risen quite sharply since its early October lows by about 10% or so. And we are basically gunning for the September highs between $94.97 and $95.33 per barrel, I should say. And yes, here from a technical perspective, provided we stay above yesterday's reactive low, that is to say the low that was made on the candle lower than the one to its left, and today's, this one here is at $88.83, provided we stay above $88.83. Further upside looks to be in store with regards to the price of Brent crude oil as well. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is at AxelR_IG. Have a lovely weekend. Financial bet of the FTSE 100. We've been falling over the last couple of days and did so by nearly 3%, and are now approaching the